Hello guys, good morning. It's Larry FX Academy once again, and today I'm going to be talking about the Volatility 25 index market. So we have actually been on long positions, like buying it for a while, and the trend has actually changed. So I'm actually going to be giving you a rundown of what our analysis on this particular market is, what we look at doing in terms of what we look at taking as a trade on this particular market. So guys, we'll be getting back down to the charts and doing a little bit of work. Now on this chart, before I would continue, I would simply take you guys down to the MT5 section of derive. Now on this section, I want to show you two things. Now I want to show you the chart on the monthly time frame, and I want to also show you the chart on the weekly time frame. So this is the chart on the monthly time frame. On the monthly time frame, one thing you can easily see is you can see that this market actually is on a downtrend. You get, so we had market drop, retracement, market drop. So this is basically a retracement for market to drop again massively. So that being the case, we'll go to the weekly time frame. Now on the weekly time frame, I would simply shrink the chart. You can see what market dropped, rallied again to the upside, and we should be expecting market to drop once more. So that being the case, we understand that we are in a downtrend and price dropped, and it's just giving us the reaction. Now what can I see? On the weekly time frame, I can clearly see that we are playing around this range between this high and this low. So market has been trying to push up, drop, push up, drop, push up again, drop, and then it's tried pushing up but hasn't touched here, and I'm expecting it to drop again massively, possibly giving us the major break we're looking for. Now that being the case, we can now go back to our normal chart. Now I'll come here. Basically what I just showed you is what we have here, which is this is that high, which is the highest point, and then this is the low. So basically I think I will just reload this chart so we can see this properly. Okay, very good. So this is the high, this is the highest point of price, and then this is the lowest point of price. So this is basically what we are going to be analyzing or working our way around. Now we had a break initially to the upside, which is this particular price point, working from this high. Yeah, so this was our break. So this was our break of trend line, which told us that we were actually in for a buy. You understand? So it simply told us we were in for a buy. So now taking this actually gave us possibilities for buys to the upside. Now what am I looking out for at the moment? So currently we can now go to the smaller time frame, which is the 4 hours time frame. So now what did we see? What changed my bias? We got a trend line break to the downside, and then that changed our bias for the buys, simply telling us that price has changed trend. Connected this low to the nearest low, and you can see price gave us a clear break of trend line. Now this being the case, we can now go to the smaller time frame. Now on the smaller time frame, which we have as the 1 hour time frame, okay, this repeated itself in the last record I made. I don't know why the 1 hour time frame it's not getting to show up. So guys, I think. Let's see if the 5 minutes time frame will show up. Okay, so sorry about that, guys. Let's just be patient a little bit. I think we're having a little bit of network issue. Okay, so let's look it up again. Yeah, yeah, so we got a break of trend line to the upside, as I said initially. Then we'll go to the 4 hours time frame, and then we can see a break of trend to the upside. So this gave us a clear break of trend line of the overall trend, telling us that price actually has changed. Two things we can see is we'll really be happy we see price getting back into the zone and then giving us a tank to the downside. Now we go to the 1 hour time frame. On the 1 hour time frame, what we can clearly see was that price actually was trying to drop. I think I would not really go below. Yeah, I would go below 1 hour time frame because there are trades we took. I would like you guys to see which we didn't take on the higher time frame. We took them on the smaller time frame. Now what happened here? We saw that price actually was reacting to this area. Yes, so this is a zone, like we call this a drop, you understand? So rally base drop, you get rally this as a base and drop. So we see price rallying back, we can expect more drop. So now in this scenario here, something happened inside this point before this break. Now when price rallied up, didn't break above here, dropped, rallied again up, they couldn't break above here. But then around that, it created a formula that we always love to see in the market. So we would go to the 15 minutes time frame to pick out this formula. So now what can you see? What you can see here is this. Price gave us a liquidity grab at this point. It's very important. We like this a lot in the market. Then it gave us a shift of market structure and a break of structure. At this particular point. Now after doing that, what do we do as traders using this particular formula? We simply mark our Fibonacci from the swing high to the swing low, and then we get to pick our entry. So now that being the case, what we do is we now pick our short to when price gets into our 0.618 level, we take our first entry, we'll put our stop loss here, and then this is for the first entry. What happened on the first entry? We got stopped out, because if you look at it clearly, you see price got into our level and we got stopped out. Now what happened again? We take the next entry at the 0.618 level, and we fix our stop loss and fix our take profit. Now on this trade, it actually stopped us out again. You get it actually stopped us out again, but then after stopping us out, it closed inside this zone, thereby giving us another reaction. So how do we get the next reaction after price stopped us at that particular time? What happened was this. After it stopped us out again, then price now gave us this point here as our new liquidity. This point here as our new liquidity. Actually, my chart is beginning to be messy, so I'll just reduce this so that you can get the message. So we've understood that the first level got so the first entry we got stopped out here, But then how did we capitalize on this whole move? We got the liquidity grab here. We got our break of structure also at this point. You understand? Because price after hitting our stop loss got back into our level, our zone. So we are still interested in the market. It gave us a break of structure here, and then what do? We'll mark our price point from our swing high to our swing low. And then what can we see? We can see that price got into the 0.618 level and 0.79 level. And then what do? We simply take our trade. Actually, what I will take from this 0.618 is because for 0.79 level is because one, it has actually been respecting 0.79 level, and then the price it's actually on the smaller time frame, so I won't want to just reach small percentage. I'm not trying to snipe here, so just repeat this here, and I won't be going for this take profit here. This may either be my first take profit, but then this would be my final level of take profit. So based on the overall level I used, you get, so this would be my final level for take profit. Some persons actually wish to take profit here, but then I like to just take profit at this point. So that was how we caught this particular market, you understand? That was how we caught this particular trade here. After that happened, one thing I saw was market did not give us an entry again. If you look at it, after it hit this take profit, price really didn't give us an entry. If you had come to this point here to look for an entry, you take this liquidity grab, break of structure, price got into this point, and there was an entry here, but that really, I didn't take it, and I don't think I would like to take this kind of an entry. Yeah, we got a break of structure, which was just like a first break of structure, and price rallied back into that level. Yeah, so this trade actually, surprisingly, it played out really nicely. And from the 0.618 level, it respected it. So surprisingly, market respected it very well. And then that was that for that particular market. We got a liquidity grab here, but price after this liquidity grab broke structure and did not get back into that level, so price left that point. Now after that, what can we see? We got a break of structure, a break of trend line. This was where we got our break of trend line here. So at this point, we got our break of trend line. Some persons will take their trade here and just swing it. They just keep holding it until it gets to the overall low of this break of trend line, or until it violates this trend line. You understand? But I don't really like to trade that formula yet. Not seeing reasons to trade that formula for the meantime. I still like to just understand the trend and use this my formula to scalp and take sales, understanding I'm in a downtrend. Now this is the next trade we saw. We got a break of trend line. We got our liquidity grab here, that gave us our entry, so that price took out liquidity, and we saw again it took out structure from the downside. Then what do? We mark our level from our swing low, our swing high to our swing low. Then price gave us reaction from the 0.618 level. We took our trade after I would have hit the first trade stop loss. We took our trade, and then this was it. Take profit got hit. Now after this, we didn't really see another liquidity grab being taken around here, so we would have not even gotten in on this particular trade. You understand? So would have not been able to get in on this particular trade. So, but then what can I see now? I can see that there's a liquidity graph here. Understand? Price from liquidity here, and market gave us a good break of structure at this particular price point. So that being the case, what am I saying? That being the case, I can now do what? Mark my fib from the swing low to the swing high, and then since price have actually been respecting 0.618, I'll simply tell you to get a good entry or a wonderful entry, just simply wait for price to get into the 0.618 level, put your stop loss here, and then your take profit should be here. If you have good appetite, you want to hold to this point, minus 0.2 level, it's fine by me. You understand? You can actually still do that because you are on a downtrend, so it's going to hit your take profit. So this is what we have for the Volatility 25 index. So guys, please subscribe to my channel. Try to give us a thumbs up to encourage us in what we are doing. Actually, this whole analysis, it's not easy to give out such wonderful piece of information, and which is going to be of help to you guys for free. So just do well to subscribe and encourage us so we're able to do more of this good work. You have a wonderful day, guys. Peace, one love.